Hello everyone, and we will be discussing AS24 today. This is the standard on discontinuing operations, a very small standard and in my opinion one of the least important standards when it comes from an exam perspective. However, we will quickly try to understand the mechanics of this standard and the typical type of problems if they come. We will discuss. There's a very standard type of a problem it comes, so rather than kind of leaving this for a chance, in a few minutes we can discuss the entire standard and also do all the relevant sums, where you will get a complete clarity on what are the type of questions which are being asked and what we should be preparing. So first of all, this standard pertains to discontinuing operations. Now for discontinuing operations, there are three main ingredients. First, what do you mean by discontinuing operation? It is a separate component or a part or a division or a segment of an enterprise which pursuant to a single plan. So there has to be a strategic plan in place. Maybe the board has approved a plan, you have identified which are the employees, assets which are getting affected, the time frame has been defined. So basically when I look at the discontinuing operation, this is maybe a segment or a division. Like for example, if I'm running three businesses, let's say I have a coaching institute, I have a restaurant, I have a CA practice. I now want to move out of my restaurant business. So if I want to exit my restaurant business, I mean that sale does not happen overnight. It does take time. Even if I want to sell, let us say a flat, it takes time, and hence if I want to sell a business, it will take time. So if I want to move out of the restaurant business is a division, a segment, a component of the entity. And how can I discontinue it? Well, I can probably find a buyer, a investor or a buyer to whom I can sell the restaurant chain. That is through a single sale, slump sale sometimes called. Or I can sell it piecemeal. I will say that one asset I will sell. But this sale is happening pursuant to a single overall plan of moving out of the restaurant business. Or I can just abandon it. Like for example, if I was McDonald's running an operation in Ukraine and there is this big war in Ukraine, in which case I abandon the operations. So I have discontinued, for example, in a particular geography. So when I'm looking at, let us say, a discontinuing operation, it should be a component or a part of an entity, a division, a segment. Merely, okay, I might have 10 restaurants, one of them is not doing well. I don't want to move out of the restaurant business. I just want to move out of that one loss-making restaurant. That is not a discontinuing operation. I am still continuing my restaurant business, and hence a discontinuing operation has to be a segment, a component, a division, a part of the entity which pursuant to a single plan. The plan should be finalized. It should identify the assets, employees getting affected. That the board resolution should be there in a time bound manner pursuant to a single plan. Over here it's a component. Component kya hota hai? Maybe something like a division, a segment, not merely a single asset of an enterprise. That pursuant to a single plan, the plan over here should have been finalized through a resolution passed by the board, and the assets or employees etc. who are getting affected should have been identified, and the time frame should have been defined pursuant to a single plan. Intends to either dispose of entirely or through a piecemeal sale or by abandonment. So that is the first criteria for a discontinuing operation. Second, that division that you are discontinuing should be a separate major line of geography or business. They have not defined how much percent, but usually more than 10% is what we usually take. Represents a separate major line of business or geography. And third, can be distinguished operationally as well as for financial reporting purposes, which means separate data is available. Because ultimately when you see what is going to happen in case of a discontinuing operation, like when you prepare the profit and loss account, you show the total revenue of the company, you show the total expenses, etc. Now this will also include the revenue that you have generated from an operation that you are planning to discontinue in the future. This will also include expenses from the operation that you are planning to discontinue in the future. Your objective is financial reporting. So if I just jump the gun a little, and the impact on presentation and disclosure, when I look at my business, let's say it might have three divisions A, B and C, my final P&L will, in my profit and loss, I don't show it division wise, I show it for the company as a whole. So I might have sales, expenses, profits, etc. Now if I intend to discontinue division B, and I don't show that in the past division B was there, but now I'm trying to find buyers for division B. If I show the same profit and loss account, the reader will think that the company grows at 10%. In the next year, sales will be 600 plus 10%, it is 660. However, division B is unlikely to continue in the future, and hence a better presentation format would be to show sales, expenses, etc. only for continuing operations, and for discontinuing operations, show the profit and the tax on that separately. Like I will show the sales of only the continuing operation, that is 100 and 300, that is 400, expenses from continuing operations of only 200, and hence the profit line by line I will show only at 200. Tax on that, let us say, is only 100, and hence the profit from continuing operations, the detailed P&L, is 100. However, in the past the discontinuing operation was there, so as a single line I will just show the profit from the discontinuing operation, which is for example 150, and the tax on that, which is, let us say, 75, and hence this is 175, something like this. This will be shown as single line items, and hence a reader can now better gauge what the future revenue etc. would be after segregating the impact of a discontinuing operation. Hence the third criteria says you should be able to distinguish and separate out what will be the profits etc. for the discontinuing operations. So again, a discontinuing operation is a component or a division or a segment of an enterprise which, pursuant to a single plan, is likely to be sold entirely or through piecemeal or through an abandonment. Second, it should be a separate major line of business or geography, usually should have more than 10%, and it should be distinguished separately for financial reporting or operating purposes. Now, this is general understanding. What is important over here is the standard gives you certain indicators where it says that a mere certain changes will not constitute a discontinuing operation. Like if you merely phase out one product and bring in new product, like you are in the passenger car business, you are selling a Maruti Alto earlier, now the sales of Alto are reducing and you are increasing the sales of Swift, then the sales of Swift are reducing, you are increasing Baleno. So here this is rebalancing of products. I cannot say that there is a discontinuing operation because you are just rebalancing the products. However, if you are selling the entire passenger car division altogether and you want to focus on some other division, that can be a discontinuing operation. So mere gradually phasing of one product and increasing another product cannot become a discontinuing operation. Or if you are closing one geography and putting a plant in another geography, that cannot be a discontinuing operation. Or if you are selling a subsidiary which is in the same line of the business as that of a parent, again merely that cannot be a discontinuing operations, but linked with other factors you can see that. So following events by themselves do not constitute discontinuing operation: gradual phasing off in favor of another product, shifting of the product manufacturing from one location, or selling of a subsidiary. Merely these will not constitute a discontinuing operations. Now, when you look at AS5, discontinuing operation is not an extraordinary item, it is unusual, but it is within the management's control, and hence this is not treated as an extraordinary item. Secondly, in case of discontinuing operation, only a part or a component of the enterprise is expected to be discontinued. If the entire company's business is expected to be discontinued, the going concern assumption will be violated as per AS1 and your accounts will be prepared on liquidation basis. This is only for division of an enterprise which has multiple divisions is likely to be discontinued. Okay, now the thing is, if let us say I decide to discontinue, that does not mean the very next day I will discontinue. So I will have to show various disclosures. What will be the disclosures? Maybe I'll have to figure out which, or I'll have to disclose which division I'm discontinuing, a description of why I'm discontinuing and about that division, the date by which I'm likely to kind of complete the discontinuance process, the profits of this division, assets and liabilities of these divisions, cash flows of these divisions. All of these disclosures have to be given. But from when do they have to be given? Remember, maybe if I want to sell a division, it is not something that is generally very public. It is usually very confidential. Board has passed a resolution, but I have not told people as yet, because if I tell them, maybe employees will start leaving, suppliers will stop giving me credit, customers will not really deal with me as much. So I would say that let me first find a buyer and then make the announcement public, right? So initial disclosure event. So when will I start giving disclosures? From the date which is the earlier of the date of a binding sale agreement being entered, or the date when a public announcement for discontinuance was made. So enterprise should give us separate disclosures, all that we just discussed, of the discontinuing operation from the initial disclosure event, that is the earlier of the date when a binding sale agreement is entered, or date when a formal plan is finalized, that is a public announcement is made. From that date you will give all of these disclosures for an initial disclosure event. Okay, and once that happens, you will show all of this breakup in your profit and loss, show assets and liabilities, disclosure, cash flow, notes, everything will be applied. So this takes care of the basic theory, a very small, cute and tiny standard. In terms of your last day revision, the typical type of a question is they will give you a particular case and ask you whether it constitutes a discontinuing operation or not. A lot of times they will be doing phasing out, and we will say that if you are phasing out in one division, you are reducing cars of a division and increasing another car, well, that is not a discount, but you are phasing out the car division altogether. then that can be discontinuing. But for all of that, there should be a detailed formal plan in place which is identified past. We are not just contemplating. Khayali pulav nahi hai. Okay, so 1, 4 and 6 I would say are the important questions. We'll quickly review this and get done with this standard. Question number 1 is a theory question. It came in the exam. Very rarely do theory questions come, but if it comes, what is the initial disclosure requirement of AS24 for discontinuing operations? There are 6 points, 3 of them are descriptive. That is, what is the description of the discontinuing operation, the date when you start the disclosure, date of initial disclosure event, and then the date when it is likely to be completed. The next 3 are financial points. So if I look at these 3 points, there are financials, profits, assets and liabilities, and cash flows. So 3 points which are descriptive, linked to dates, etc. What is the operation, what are the date when I am starting disclosure by till when it is likely to be complete, and 3 points linked to financials, profits and the tax impact, assets and liabilities, and cash flow. Okay, next you go to question number 2. A cosmetic article producing company provides the following information. There is some cold cream and vanishing cream. Basically they are creams only. So over here I am reducing the cold cream, increasing vanishing cream, reducing cold cream, increasing vanishing cream. Now the company has enforced a gradual change in the product line based on an overall plan. The approving authority of the company has passed a resolution in March 12 to this effect. So over here the board has approved this plan. The company follows calendar year as its accounting year. Basically that means the year ending is 31st December 2011. By that date the board has not even approved this plan. Should this be treated as a discontinuing operation? The answer is no. There are 2 reasons you can say. First, this is gradual phasing off of one product and increasing of the other product in the same line of business, and hence this is not a discontinuing operation. Second, there is no formal plan in place up to 31st December 2011. It was finalized by March 12, but there was nothing in place on 31st December 11. Okay. Question 3 I would say is exactly similar to question number 4. So if you refer question number 4, which is a question which I would do for LDR, 3 is automatically done. So if I look at question number 4 only, Rohini Limited, this is from an exam question. Rohini is in the business of manufacturing passenger cars and commercial vehicles. The company is working on a strategic plan to close the production of passenger cars. It is like Tata Motors, selling passenger cars as well as commercial vehicles like trucks, and to produce only commercial vehicles over the coming 5 years. So it is closing a division, mind you. It is not something where I am saying that nano I will not sell, but instead of that I will sell something else. So I am closing the car division. However, this is the important sentence. We will highlight this. No specific plans have been drawn up for sale of the division nor its assets, which means a detailed formal plan is not in place. Remember, a discontinuing operation is a component of an entity which pursuant to a single plan is, but here there is no plan in place. So this cannot be a discontinued operation till the time there is a plan. As a part of its prospective plan, it will reduce the production of passenger cars by 20% annually. It will also establish another new factory for the manufacture of commercial vehicles. But commercial vehicles is a separate segment which you are still running, but you are still discontinuing. It is like saying I am discontinuing restaurants and focusing more on coaching. But discontinuing a restaurant is very much a discontinuing operation. And transfer surplus employees in a phased manner. You are required to comment if a mere gradual phasing out itself can be construed as a discontinuing operation within the meaning of AS24. Your answer is no. Merely you are gradually phasing out, that cannot be a discontinued operation unless that is pursuant to a single overall plan which has been approved, which is not the case over here. And further, the phasing out, you are reducing one, increasing the other. Merely because you are phasing out does not mean it's a discontinuing operation. If the company passes the resolution to sell some of the assets in the passenger car division and also transfer a few other assets of the passenger car division to the new factory, does this trigger the application of AS24? Well, remember, there should be a formal plan in place to sell the entire. Here it is just a plan to sell some of the assets, and hence I cannot say that this is a discontinued operation. Would your answer to the above be different if the company resolves to sell the asset? Resolves means decides to sell all the assets of the passenger car division in a phased but time bound manner. Yes, your answer will be different, in which case it can be treated as a discontinued operation because the passenger car as a division itself is getting discontinued. So over here this is actually point 1, this is actually point 2. In point 1 we are saying it cannot be considered as discontinued operation as strategic plan has no final approval. Second, again it is no, the resolution is silent about stoppage of the car segment. It is just selling some of the divisions, like selling one of the restaurants. And point 3 over here, yes, now it can be. Yes, a phased and a time bound program resolved by the board clearly indicating the closure in a definitive time frame will constitute a clear roadmap, and hence it can be a discontinued operation. So this is an important problem. If I go to question number 3, it is exactly similar to 4 part 1. So quickly glancing through that, Arzu is in the business of passenger cars and vehicles. Company is working on a plan to shift uh, passenger cars over 5 years. Again over here, no specific plans have been drawn up for the sale. This is an important sentence. As a part of this plan, it will reduce 20% annually, commence another factory, employees will be transferred. These plans have not yet been approved by the board, and the new factory for commercial vehicles has not yet started. Clearly, this is not a discontinued operation based on the language of the law at least. Okay, so this is question number 3 and 4. Question number 5. XYZ runs a famous chain of restaurants. It decides to sell its stake in one of the restaurants. The restaurant contributes 5% of the total revenue of the entire business, but XYZ does not intend to sell any other restaurant. So does that constitute a discontinuance of the restaurant? No. It is not sale of a component which is a separate major line. Yes, maybe if I sell one classroom out of my 10 classrooms, it is a sale of assets, but it can't be said that my coaching business I am discontinuing or the restaurant business I am discontinuing. No, so this is not a discontinuing operation. Point 6 on the other hand, this is an interesting for LDR. Group MN is in various industries like hotels, airlines and software. These are 3 separate components, verticals. Through its subsidiaries, it has decided to sell the airline business, decided to sell. So here you are no longer contemplating, you have decided to sell the airline business to be able to concentrate on other verticals. As a result, it has started to sell its aircrafts and paying off the associated liabilities. Okay, so this you have started. During the year, it sold 5 aircraft out of a fleet of 50 aircraft as a part of the sale plan. So is this being sold as a part of the overall sale plan? Yes. Is airline business constituting a separate major, 25% of the group revenue? Yes. So is airline a discontinuing operation? The answer is yes. Remember, a discontinuing operation is an operation which is a separate major line, 25% of the revenue. It's a separate component of the entity. Yes, it is different from everything else, which pursuant to a single plan, which has been decided, which has been resolved, is being discontinued. So your answer is yes, it is a discontinued operation. So a student wants to usually differentiate question number 6 with question number 3 or 4. In 3 or 4, the plan was not finalized. In 6, the company has decided that it is nowhere given. So this highlighted sentence is the difference. No specific plans were drawn up. Whereas here it says that it has decided to sell. It's not contemplating or proposing. It has decided. And pursuant to that plan, it has started to piecemeal sell its aircraft. Okay, and the last question number 7 over here, entity RT operates in a single state, trading in 3 products X, Y, and Z. Details with respect to the performance of each of these products are, so you have X, Y, and Z. RT has decided to sell the business relating to Y, okay, to its competitor. Achha, is it contemplating or it has decided? Sir, it has decided. So when I look at question number 6 and 7, we have decided to sell, whereas in question 3 and 4, we are proposing / planning, but no resolution / decision still taken. So that is the difference. Is it a discontinuing operation? Well, yes. If Y is a separate major line, well, it seems to be a major line. It has 14 lakhs out of 35 lakhs. It's a fairly big component, and hence Y constitutes a major product. It will be considered as a discontinuing operation. And that is pertaining to AS 24. I hope this standard has been clear. Just try to remember and try to solve on questions like question number 1. It's a pure theory one, or more likely question number 4. Type of questions. We have marked out our LDR questions over here. You can quickly glance through it and get done and dusted with it. You might say it is not important, but this is less than 20 minutes. You can complete this entire standard with questions. So might as well do that and get it out of the way if it. Okay? Chalo. I'll see you soon with another standard. Keep studying well. Goodbye and